Class is in session. Class is in session. Today, we're going to discuss something called closing costs. I know that normally when I speak to someone for the first time, whether it's a first-time home buyer or someone that hasn't purchased a home in a long time, or someone that's looking to refinance, one thing that we got to discuss is something called closing costs. All right, very important. One thing that I see quite a bit, especially with first-time home buyers, they hear about down payment. All right, down payment. You put it down 3%. You're gonna put down 3.5%. You're gonna put down 5%. But they always leave out the portion of closing costs. Closing costs is a lot of times just as much as a down payment, and it's really important that you find out what your closing costs will be. Now, granted, depending on what state that you're in, what county that you're in, the closing costs can vary. So this right here, what we're going to discuss today is kind of like a generic form, but this right here should work in almost any state, any city that you're a part of. You got to just get into the particulars once you look at the home that you're either looking to purchase or you're looking to refinance. So it's very important that you understand what closing costs are. So before we get into my version of closing costs, the easy way, let's go over the definition itself of what closing costs would mean to you. So the best way to start this off is let's look at the definition of closing costs. All right. So closing costs are a variety of fees and expenses associated with a real estate transaction that are paid at the end of the deal, separate from the purchase price. These costs are paid by both the buyer and the seller and can include items like appraisal fees, title insurance, attorney fees, and recording fees. They could be a significant amount, often ranging from 2 to 5% of the home's purchase price. So, as you can see, with that amount all by itself, you know that it's something that we need to discuss. Closing costs, like you said on the definition, it can be between 2 to 5% of the home price of the purchase price. Now, the way I always present closing costs is a cost of doing business. Just like when you're looking to purchase a car, when they tell you about the car registration, the tax, and all the different fees, the third-party fees that you pay anytime you're looking to purchase a car. Same thing will apply for real estate, but just at a larger scale, because obviously the purchase price is a hell of a lot more. So that's what we're going to go with today. All right. So the cost of doing business is the best way to explain that. And you have your down payment. So, like I said, you have your down payment that could be 3%, 3.5%, 5%. And then you also have your closing costs. So let's just give an example of, say you have to put down 3% on a conventional loan, 3%, and then also an additional 3% or 4% for closing costs. So if you take the 4% of the closing costs and 3% of the down payment, now you're looking at about 7% of the purchase price is what you would need together to take care of your down payment and your closing costs. And if you haven't seen any of my videos before, so a down payment is the amount of money that you're putting down to offset your loan amount. So say your purchase price is easy math. I love easy math. Say your purchase price is at 100,000 and you have to put down 3%. So instead of your loan amount being at 100,000, your loan amount would be $97,000 would be your loan amount, meaning that you put down 3%. So $3,000 is what that would stand for. And that's how you do the math. If it's 200,000, 300,000, up to $1 million, it all depends on what type of home that you're looking to purchase. So let's go over closing costs. All right. So this is a home estimate. This is something that I send out to my clients when we're looking to make a purchase or if they're looking to do a refinance. I like easy, and this platform is really easy to read, and I've been using this now for a couple of years. All right. So let's start here. So the first part, you'll see that this is a conventional loan. All right. I'm not going to get into what a conventional loan is, but just know a conventional loan, we can go as low as a 3% down payment. So for this estimate, and I'm going to keep emphasizing, this is only an estimate. All right. So anytime you're looking to get a home estimate on a loan, when you're looking to purchase a property or refinance, it's only an estimate. It doesn't matter if it's your actual loan estimate. So you have a loan estimate that is sent out to you when you start the mortgage process. But before you get to that part when you're just doing pre-approvals, a lot of lenders, mortgage brokers, we're going to send out a home estimate just to give you an idea of what the purchase price is going to be and the payment and the closing costs and your down payment. So I just want to emphasize it's strictly just an estimate. So purchase price at 350,000 would be our estimate for today, 3% down. So what you'll do, guys, is 3% of the purchase price, and you're going to get $10,500. So, like I told you before, when you put down 10,500, that's going to offset your loan amount because you don't want your loan amount and your purchase price to be the same. There's only a few loans that will allow that, and like the VA loan is one of them, where you do not have to put down a down payment. So most loans you are required to put down a down payment, which is good because you're going to have instant equity in your property, which is extremely important because say, God forbid something was to happen, you had to sell your property, then at least you can still cover the cost of you selling your house because you still have equity in your property. So for this example, we're going to go with a 6.5% interest rate. It doesn't matter when you look at this video, the rate is going to change. But for this example, we're going to use 6.5%. So down here, you're going to see something called an APR, so your annual percentage rate. So the annual percentage rate is not the same as an interest rate. APR is when you take the interest rate and you add in the closing costs on top of that rate, you're going to get an annual percentage rate. So anytime you have costs, you can convert that into a percentage. And that's what they're doing there. So just give you an idea of what the actual cost would be once you do a comparison. The benefit of doing this is you could compare this to, say, you looked at 3 or 4 of the lenders and their rate is slightly different. So all that means is the closing cost is different. There's multiple ways why the closing cost is different, but they should be close to being the same. It all depends, but that's not the purpose of our video today. So moving along, we're going down to the monthly payment information amount here. So we're going to break this down. So the first section you'll see here is your principal and interest. Now, guys, this is technically your mortgage payment. So say you had Chase Bank, this would be what you're paying towards your mortgage. So a portion of that would be going towards your principal, and majority of your payment would go towards interest. The next section would be your homeowner's insurance. So if you have this escrow, then you're going to pay your insurance, your taxes, your mortgage, your PMI. All that's going to be paid with your mortgage payment. So your insurance will be divided up monthly. I have it estimated around $198.33 for this purchase price. The property taxes, like I said, I'm just estimating here. We're going to estimate that your tax is going to be $250 a month for your taxes. The PMI, so that's your private mortgage insurance. And not that we're going to get too deep into this today, but just a quick course on that. Private mortgage insurance is for the lender. This isn't your homeowner's insurance like you show here. This is just in case you default on your payment, you default on the mortgage itself, and you go into foreclosure and you lose your home. So that is an insurance policy for the lender, so they can recoup back a lot of the money that they use on your mortgage itself, and for the money they're not going to make off of the loan because you defaulted on your mortgage and you lost your house. So that is what that is for. But what happens is once you get at least 20% of equity in your property, then that will go away. Okay. A lot of variances when it comes to when it goes away. There's not the video for that today, but just know if you put down 20% as a down payment, typically you're not going to have private mortgage insurance. Not typically, you want to have private mortgage insurance, but your total payment, once you add in your mortgage payment and your escrows, including your PMI, your principal, interest, taxes, and insurance. So that's what PITI stands for: principal, interest, taxes, and insurance. Your payment would be $2,831 for this example. All right. Now, if you have your homeowners association dues that you pay out monthly, we're going to account for that as well. So I didn't put that in there because for this example, I didn't have HOA. Not everyone has an HOA, but if you do have an HOA, the lender will count that with your payment. Okay, so even though you're not paying this with your mortgage payment, it will be calculated with your debt ratios. And that's the reason why we look at that, just to make sure your debt ratios work and that it fits your budget. So the next section is your prepaid costs. Very important. So going back to what I was saying here with your taxes and insurance, when you go to settlement, you're going to prepay your taxes and insurance. Because when you make your monthly payments, you're basically preparing for the following year, not this year, but for the following year. So these are just small incremental payments that you're paying for the next year. So it's 2025 at the time of this video. 2026, when your taxes and insurance is due, then by you making small payments in your escrow account, the lender is going to have enough money to pay your taxes for you and your homeowner's insurance. So the benefit of having an escrow is you don't have to worry about cutting the check for your taxes and insurance. This is going to be paid out by the lender. So they're going to show you how it's been paid, but nothing that you have to do yourself. So you're going to prepay that. So say we did 12 months of insurance, estimated at $2,380. Your taxes estimated $2,500, and your 30 days of interest. The 30 days of interest every single day of the month is per diem that you're paying to the lender every single day. So what I did here was I counted a full month of interest is what we're doing here. So that kind of makes sense. So 1,813. It depends on when you close. All right. So if you close on the first part of the month, then you're gonna have a full month of prepaid interest per diem that you got to pay. If you close at the end of the month, the complete opposite. So if you have 1 day left in the month, you will only pay 1 day of interest. All right. Now this right here, that can be a little confusing, but as soon as you find out the day you're going to close, doesn't matter if it's a refinance or a purchase, then this number will change. All right. So that's a moving target. All depends on what day of the month that you close. All right. When you total all of these items together, prepaid cost is $6,693. So these are your prepaid costs. Like I said, you are prepaying your closing costs up front for your escrow. So it says here under closing costs, this is going to be a total of your fixed costs and your prepaid costs. So fixed costs, let's go with and see what that is. Your fixed cost is going to be the costs the fees that you pay your attorney or the title company that you're using. Once again, depending on what state that you're in. Some states have title companies, some states have attorney's office. So this doesn't really matter what state you're living in. The cost is going to be primarily the same. So you just got to find out if you're in an attorney state or a title company state. So you see title, then that's what this is: title or your attorney. All right. So homeowner's title policy, loan policy, escrow fees, lender title policy, your attorney fee, your flood certification, your tax fees. These are all coming from the attorney's office or title company. Now, not every fee is going to be the same. So I never really get too deep into this until I know exactly which title company we're going to use or attorney's office we're going to use for these costs. But just know this, just keep everything generic. These are the costs from the title/attorney's office. Now, on the right-hand column here, your appraisal. Your estimated appraisal could be $600, $500, $700. It all depends on the appraisal company that's going to take your order. The way that works is before, years ago, when I first came into business, we can choose the appraisal and we could speak to the appraisal, but they changed those rules now. When you're working with an appraisal company, from the lender's perspective, all we do is we send out a request, and we have a network that finds an appraisal and they set everything up. So we never know what the actual cost is going to be. We have an estimated amount what the cost is going to be, but it's never the same. So for this example, I'm gonna just put $650. But if it wound up being $600, then you know it's going to be $50 less than what we showed on the estimate that we sent to you. Your credit report, this is going to vary. So I just put $100 in there. Underwriting, that's going to vary depending on what lender that's working on your loan. That can be $700. That could be $1,000. That could be $1,500. It all depends. Your state transfer taxes. Once again, something else that it depends on what state that you live in. For this example, I'm going with 2% of the sales price. So what you're doing, remember in the beginning, the purchase price is $350,000. So all you do is multiply percentage that you got to pay to the purchase price. So 350 times 2%, you're going to get $7,000. Depending on what state you're in. I've seen it being 0.5%. I've seen it being 1%. I've seen that 1.5%. I've seen it all the way up to 2%. So depending on what state that you live in, that's where it's going to make a determination of how much that's going to be. But your broker or your loan officer, your lender, they will explain to you what that cost is going to be. All right. And just a side note, as a first-time home buyer, it depends on what state that you're in. It's not in every state, not in every county. but sometimes you do get a credit off of your transfer taxes because you are a first-time home buyer. So, depending on what state that you're in, what county that you're in, make sure you ask your loan officer, your broker, your lender, is there any first-time home buyer credit if you're a first-time home buyer? Now, there are multiple ways to look at a first-time home buyer. Some state says that 3 years, if you haven't owned a home in 3 years, you're a first-time home buyer. And obviously, if you never owned a home before in the past, you are considered a first-time home buyer. The next section here is a prorated tax. So this right here goes back to, once again, if the seller, if it's new construction is one thing, but if you have a seller, a pre-existing home, more than likely they have spent some money on the taxes for that year. Almost a guarantee they did. If there's any money that they paid into the taxes, you more than likely have to reimburse them back for the amount that they paid. Because if they're moving into the house in July, if you're moving into the house in July and they've already paid for the rest of the year, they can't pay taxes on something that they no longer own. So you basically going to reimburse them back for that amount. The recording fee, it depends. So just a spot holder right there for now. So I just put in $200 right there. But if you add in all those fixed costs, you're gonna get around $13,956, so about $14,000. So if you go back here, you'll see the fixed cost is what we just went over. Your prepaid costs, which is right here on the left-hand side, you add those two together, you can get a total of $20,650. Your down payment is 3%. By this example, 3% of your purchase price is $10,500. So you add those two together, you're gonna get around $31,000 is what you're gonna need. All right, so that basically sums it up with the closing costs and a little bit on your down payment. So let's talk about this. When you're looking to purchase your property, this is gonna be on the purchase side. So if you're looking to purchase your property, you can ask for something called seller concessions or seller help. You know, we use those terms interchangeably. So if you're buying a home and you request seller help, you could say you requested 3%. So in this example, you're going to take the 3%, multiply that times the purchase price. That's going to give you your $7,000 for this example. So whatever that number is, so if you ask for 2%, 3%, 4%, 5%, just multiply that times the purchase price. Depending on if you're going with a conventional loan, the maximum seller concessions is different than what the FHA maximum is, what the VA loan is. So it depends on what type of loan that you are looking to use to purchase your property. Now, what I'm going to do down in the comment section or the description, I'm going to show you the different layers of seller help. So if you have an FHA loan, you have a conventional loan versus VA, how much you can request for seller help. Side note, depending on what market that you're in, where you're located, sometimes it's a good idea to ask for seller help and sometimes it's not. Let me explain why I say that, right? I always teach my buyers to look at the transaction like they are a seller. So if you're looking to sell your property and you're looking at 10 different offers, you have to remember sometimes if all the other offers are extremely aggressive and no one is asking for seller help and you are asking for seller help, the chances of you going on a contract may be low. Not saying that they wouldn't accept your contract, but you also have to look at what market that you're in and just the area that you're looking to purchase, right? So I never get too deep into that. It depends on the person, depends on the area that you're looking to purchase. Sometimes you don't have a choice. You have to ask for seller help because if not, you won't be able to purchase the home itself. So say you use a down payment assistance program and they cover $15,000 out of the $30,000 that you need. With that example, you still are short by like 15 grand. So sometimes the only way that you can cover that amount is ask for that money from the seller. Something that you need to speak to your real estate agent about to see if it's a good idea to ask for the help. Like I said, if you need it, you need it. You know, you don't have a choice. But if you do have an option, so say you had all the money that you need and you want to get it really aggressive, you may not want to ask for that. It just depends. Just want to throw that out there because now we're looking at your strategies. One is you can do that. So you can ask for seller help. That's the first thing because a lot of people just are not aware that you can ask for seller help. But on the other side of that, depending on your market, sometimes it's good to ask for seller help. Like there's certain markets that I work in right now, especially in the affiliate market. It's very common to get seller help. Not saying it always happens, all depends on the transaction. But you always want to consult your lender and consult your realtor to find out, is it something that you truly, truly need? Because once again, if you're trying to outbid other people, you ask for seller help, sometimes it doesn't work out in your favor by asking for it. But once again, it just depends. Speak to your real estate agent and speak to your lender and find out what ways this will work out for you and how much you can even ask for seller help. So I always like to be as transparent as I can when I'm doing these transactions. And the reason why is, as you know, everyone was a first time home buyer at one point. And I remember like it was yesterday when I was in the market to purchase my first house. And all I heard about was your down payment, down payment, down payment, down payment. The same thing when you look on social media. Go Birds. When you look on social media, you look on the internet, sometimes the only thing you see is down payment. Closing costs is very important because of obvious reasons. It could be as just much as a down payment. But going back to my story, I got sidetracked. I'm getting into this. The amount that I needed for settlement was much more than what my estimates were at the time. Now, granted, this is a few years ago, so the estimates wasn't as accurate as they are now. We didn't have all these systems in place that gives the lender a better idea what the cost is going to be. So imagine you've been a first-time home buyer, and right before settlement, say a week out, and you thinking that you're going to need $15,000 to cover all your costs, like your down payment, your closing costs, and it wound up being $23,000, $24,000. That could be a big dilemma, and that's what happened with me. And I'm like, you know what? Once I came into the industry, I was like, when I'm working with my people, I got to make sure they understand all the costs. I got to be black and white with it. So there's realistic expectations on what the cost is going to be, because I'd rather for them to have too much money than not enough, or try my best to eliminate any surprises. For an example, I would have loved to had a home estimate like this is what I just showed you guys. That'd have been great. And another thing I do on top of that, just to make sure that my clients understand what they're looking at, is I also include a video that I do to go through the same thing we just did. It's very close to that, but it's set up for that particular home estimate that they're looking at. Now, we're not going to send one out every single time we have a home estimate, because some people have 20, 30 different home estimates. We don't want to do that. The biggest thing is just so you can understand how to read a home estimate and how to get used to seeing the costs with real estate. And so when you get used to seeing them all the time, then you don't need to keep looking at a home estimate. But in the beginning, it's very important that you understand what's all involved in your closing costs. So that's why I thought it was so important to me when I was the first home buyer. When I came in the industry, I was like, look, I got to make sure that my people understand what they're up against. And so say you're looking to purchase a house next year, if you know what your down payment is going to be, if you have an idea what your closing costs is going to be, it helps you out better when you're trying to set your goals or whenever you're looking to purchase your house. If you know you need $30,000, now you can set up that time frame so you can purchase a house where you know you're going to have that money. If you need $15,000, you know, okay, what I need to do to have enough money so I'll be prepared when it's time for me to look to purchase a house. And the last thing I want to hit on is people come into this industry or looking to purchase real estate with no idea of what the costs are. With YouTube being out there, social media, chat GPT now, you can ask these questions like, how much money, an estimate, how much money will I need? So there's really no excuse for sometimes the ignorance that I see. And ignorance is not a bad word. That is just meaning that just a lack of knowledge in a certain area. When you come into the real estate market and you just think everything is going to be free or everything is going to be paid for, sometimes there are situations when that's the case, when your down payment assistance program may cover that or the seller may cover that, but that's not always the situation. It always depends. So my thing is to do your research. And this is the reason why I have the YouTube channel, just to put realistic expectations out there for you. I want to make sure that you fully understand what is needed. So you take, okay, we need $30,000. Okay, how can we make this 30,000 go away? And your broker is going to help you out with that. Your lender is going to help you out with that. Okay, even though you need 30 grand, this how we can take care of all these costs. This where you can get the money from. You got gift funds you can get from parents, friends. You have your 401k, you have your investments that you can use your money for your down payment. You have down payment assistance program. There's a lot of different avenues you can take to take care of the cost, but you want to understand the real cost of purchasing a property. You got to understand that. Like I said, you have these platforms out here, and this is the reason why I do this, just to make sure that when you're on the phone with me or you're on the phone with any other person that's at a lender, you already understand what to expect versus thinking that everything is going to be just free and nothing, there's no charges for anything. Because even outside this actual real estate transaction, you still need money for your earnest money deposit. Okay, you still need money for your home inspection. You still need money for your appraisal. So there is money that would be needed. And on top of that, that's the bare minimum. On top of that, you're still going to need money for utilities, to get utilities turned on, for the move itself, can be costly. So these things, when you're looking to purchase your property in advance, you want to write these things out. So matter of fact, I'm also going to add in my mortgage guide, because it's going to give you a breakdown of what you need to look at when you're preparing to purchase a home in the future. So there isn't any surprises. Same thing when you're looking to buy a car. When you're looking to buy a car, you have an idea of how much money you would need when you get to the dealership, right? But the cost is not as extreme as a real estate purchase. But the benefit on the real estate purchase side, we have ways to offset these costs. But so when you make the phone call, when you speak to a professional, we can show you how to do that. So my job is to be transparent with you. My job is to show you what to expect when you're looking to purchase a house. And let's make this thing just a great experience. But the more you uncover in the beginning, the least amount of stress you're gonna have to deal with. And so, which is really important, because the fun part is buying a house, but you want to make sure your monthly payment works. You want to make sure that you got enough money to purchase the property, and you tackle this thing in a realistic manner. So that's what we're here to do. So yeah, that's all I have on the closing costs. I hope I didn't venture off too far. It's just, sometimes I get passionate about what I do here, and just want to make sure that you understand what it takes to buy real estate. Oh, one other thing I want to bring to your attention. So there is something called the buyer agreement that you have to sign. So when you're looking to purchase a house and you have your real estate agent that's working with you, more than likely they're going to show you an agreement that you have to sign to basically says that if you're using them as an agent and the seller does not agree to pay them, then you are responsible for their commission. All right. So you have two agents. So you have your listing agent, you have your buyer's agent. Your buyer's agent, if you're looking to purchase a property, you'll be working with a buyer's agent. So their job is to show you, different homes and consult you on the purchase of your property. Like I said before, the seller used to pay for both agents. Now that's not always the case. It's up to the seller if they want to do that or not. But if the seller says that we do not want to pay your agent, then you're held responsible for that. So when you sign an agreement, you're basically saying that I have enough money to cover your commission as well. And I totally understand the purpose of the agreement. And it definitely makes sense for you to pay for your agent if the seller doesn't, agree for that payment. So you're going to fill that out. So the only reason I brought this up is this can be a part of your cost as well. So when you're looking to pay for your closing costs, and I said it could be between 3 to 5%, that number can be elevated if you have to pay for your agent. So you have to speak to your agent about that. They'll explain to you how that works. But I just want to put that out there for the asterisk there, that there's a chance that you may have to pay for your agent. But when you speak to your team, we're going to go with this with you. So your agent's going to explain that to you, how that part works. Me as your broker is going to go over the lending part, and we're going to just make sure that we have the money there to cover all the costs. So that's all I have for you. If you have any questions, please feel free to reach out to me anytime. Please leave a comment below if you have any questions. I, definitely check the comments every single day. And yeah, so subscribe to the channel and please share. There's plenty of first-time homebuyers out there. There's plenty of clients that hasn't purchased a house in a long time that needs to see this video, a full breakdown of this. Sometimes people kind of glance over the closing costs, and I want to take my time and go over the closing costs with you so you can fully understand how the costs work and how it can impact you if you do not make this part of your strategy. All right, see ya. Peace.